The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And the stock of the day is Telix Pharmaceuticals, which has received a reimbursement approval related to an imaging agent for prostate cancer. So the U.S. Centers for Medicare and Medicaid Services have paved the way for reimbursement of the Telix product, which Telix describes as a significant milestone. That's a quote. And the company's U.S. commercial strategy. Last Friday, Citi initiated coverage on Telix, if you recall, with a high-risk buy, saying the company's base business will be bigger than the market thinks. And today, as mentioned, Telix shares outperforming the broader market, up by 5.6%. My guests today, Pepe from Shaw Partners and Rudi Filapek from FNArena. Pleasure to have you both here. Telix, so a little bit of a bump in the road earlier this year. Is this affirmation today that the trajectory is higher as it brings more of these drugs closer to commercialization?
I think that this stock was on the last time I was on, I said it was on two strikes because its last two drug-related market updates, it's two separate drugs. They weren't FDA knockbacks, they were FDA, give us some more information. Now, at the price it was trading at, not that it was priced for perfection, it was the believers were believing and it was priced, $30 at its recent peak. So it needed continuing positive news. The trend is your friend until the bend at the end. We got the bend at the end with not one but two announcements saying, yeah, we thought we had two wonder drugs, we need to further convince the FDA. They didn't say no, they just said two separate announcements. Yeah, maybe not. Share price got hammered. Analysts continued to like it, kept the buy on it. You saw some funds doubling down or rebalancing down, which is probably the right strategy at the time. And I called it at two strikes because the next announcement had to be a positive, not another, here's another drug that the FDA is not enamored with, because that may have actually pushed the share price lower. We got a good announcement today. Some government funding related to hospitals. It's a positive cash flow announcement. It means more cash in the door. So what's the opposite of a strike? Tick. So positive announcement, share price. It's only up 5%, but it may suggest that we've seen a floor in the share price, and hopefully it's next two or three or four announcements are a positive. It is materially cheap if you believe analysts' forecast, because analysts haven't fully followed the share price down. You had a very well-regarded analyst who changed firms, reinitiate, which was also helping to fuel the buy call. So I'm going to call, having previously called it a hold, I'm going to call it a buy now because it was a positive announcement. If they can string two or three of these together, it's not up 5%, it's probably up 60, 70, 80% according to analysts' price targets. So the price from here is large, but they need to back this up with another positive announcement. Fingers crossed that they do. So for Martin Crab's sake, I will call it a buy.
I don't know what's happening. What is happening?
No.
Double buy?
No.
What is happening?
Oh dear.
Anyway, let's throw some wise men's words in here. Peter Lynch, know what you own and why you own it. All right? This has been for years one of the highly promising, broadly regarded as one of the higher quality companies on the ASX on that, but because of its early stage of developments and the sector it's in, it was never going to be a straight line trajectory. And once you realize that as an investor, you realize that at some point the market gets over enthusiastic, which we've seen previously, and then the hot money flows out when there's a little bit of bad news happening. But that's basically what we've seen. Right? Now, that's the theory. That's easier said than done, in particular when you're not in there and you don't see your share price fall. But essentially, if you believe that this trajectory is still towards a positive outcome, this share price can easily double, triple, quadruple. Not necessarily next week. And you see it on those price targets put forward by the analysts. I mean, some of them, $34 is more than double from 15. Yeah? But again, it probably won't be in a straight line. And it's your own decision whether you focus on the share price, which can be quite volatile, or you focus on the business underneath the share price and what could potentially be achieved. And if you opt for the second scenario, then you stop watching the share price every day, you just own your portfolio. But don't put too much money in there, because obviously it's not without risk.
Got it. Rudi Filapek Van Dijk, Philip Pepe, thank you so much for your views on TLX stock of the day. It is a double buy.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.